And Landon, before we get to some of this social data around these discount market companies and discount stores, I got to get your thoughts on the market so far. Another volatile session.
Yeah, it's pretty crazy. This is the new normal. I thought that maybe we were going to get a little bit of consolidation and bounce today, and of course that's not out of the question yet. But my gut feeling, and this is just a gut feeling, is that we're close to the bottom. I had some hedges that I put on a couple of weeks ago, and I'm taking them off today and taking those profits, and I'm actually flipping to just rolling the dice a little bit on a bit of a rebound. So I think that there's a possibility that we get a big boom from here, but it's a gambler's money at this point. So, it's not an investment strategy by any means, but I do feel like we're getting close. I think we need some more. Honestly, I think we need some bad news that shows some numbers coming in, and we can just take in the number of cases and take in and kind of get a picture of what the economy is going to be and just get rid of the uncertainty with fact. And I think that bad news could actually help us here. And we're off, 30% or something like that, or the market's effectively been cut in a third. That's a really big move. When you zoom out to like a 10-year chart of the market, it kind of makes you think we might be a little bit oversold here. But catching a falling knife is always a risky proposition. So any money that you're doing with that kind of strategy is gambler's money, and just be aware of that.
Great point, Landon. I've kind of said the same thing in terms of potentially seeing some bad news and then seeing the market up on that bad news. But I want to talk about specifically some of your data around Five Below in this discount retail space, because we know a lot of these essential businesses are actually, not necessarily benefiting from this, things like Walmart, but at least outperforming and allowed to kind of continue business as normal. Obviously, with financial stress, some of these discounters might be one of those places that consumers are going to save a couple bucks. What are you seeing so far?
Yeah, I mean, so it's crazy. With Five Below, we're seeing really strong purchase intent numbers. People are still talking about shopping there. Even if you look at the current quarter underway, which is about halfway through, it's very strong numbers year over year. I think plus 50% year over year. You can see our green line here, which is 90-day moving average of purchase intent. That's people talking about going to the store. Yes, it's down a little bit, but it's always down a little bit this time of year, and it's basically at new highs. It's higher lows and higher highs. The stock has been doing extremely well up until 2019, kind of flat. And of course, now it's been cut in half, basically, which is really wild. But purchase intent, very strong, plus 27% year over year. And everything is going well for this company. People like it. They didn't like the price increase from above, under $5 to above $5. So I guess that's kind of a risky take when you name a company around a price. But they've had some issues with China as far as, tariffs and just supply chain not related to the virus before all that. And that caused prices to go up. People didn't like that, but we're seeing a rebound in sentiment, and happiness is starting to come back a little bit. And all in all, people really like this company. I think this is more of a macro at half fall. I like this company going forward. Long term, I do like this as an investment opportunity.
My question to you, with the chart on this name and the troubles that they seem to be having, even though they seem to be doing a good business, and we would think in any slowdown in the U.S. economy that a Five Below, a discount retailer, might actually outperform. Why is this stock? Is there a supply chain issue with them? Because any low price discount retailer is probably getting goods from China. Is that what this stock move or the drop off is reflecting, or is it something bigger? As you said, they excuse me, made a little bit of a gaffe when they moved from Five Below.
Right. Yeah, I would say that in general, it's a supply chain issue. I think that a lot of their products are coming from China, and I think that's a monster concern for anyone that's investing in this company. And so obviously that's big. We don't see weakness with the consumer, though. We see that people love shopping here. They love the products, the price. They got a little bit of annoyed with the price going above $5. But in general, they like the company. It's just a matter of whether or not people are actually going to go shopping right now. So I think that it's not the consumer. I don't think it's really the virus in the United States that's causing these problems. I think it's more of supply chain and just overall economic concerns.